Hello, everybody, and welcome to the latest installment of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners re-domesticate out of volatile legal and tax environments like Utah to more predictable pro-entrepreneurship, pro-growth jurisdictions. Today, we are discussing how to move your existing LLC or corporation out of Utah to a new state to avail yourself of tax benefits, among other advantages. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and a certified public accountant serving clients in matters of business, tax, and commercial law. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, together with a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Now, Utah ranks in 15th place, that's 1-5, on the Tax Foundation's most recent state tax competitiveness index, up 1 position from 16th the prior year. That's not a bad place to be, not by a long shot. But is there a better solution? We'll come to that. Before we do, though, let's provide an overview of Utah's tax picture so you can get a sense of what we are working with. Utah levies all 5 major tax types: individual income, corporate income, sales, property, and unemployment insurance. It ranks as 15th not by omitting a tax, but instead by imposing each one at a relatively competitive rate on a relatively broad base with minimal distortions. The Tax Foundation describes Utah's tax code as a model for states that impose all major taxes. That's an important caveat, as we will come to in a few moments. The individual income tax is a flat 4.5%. I was going to say 5%. No, it's 4.5%. And the corporate income tax is also a flat 4.5%. Both rates were reduced from 4.55% in the most recent legislative cycle, and the Utah legislature has consistently trimmed rates as revenue collections have remained strong. Importantly, there are no local income taxes, not in Salt Lake, not in any county, not anywhere in the state. The rate on the return is the rate that the business owner pays. There is no secret second level. I emphasize that because some states have that. Looking at you, Pennsylvania. There is no hidden addition. For a state that imposes an income tax, that is about as clean as it gets. Also, Utah does not impose a so-called throwback rule. It does not impose a capital stock tax. It does not impose a gross receipts tax. It conforms to federal Internal Revenue Code provisions for first-year expensing of capital investment, meaning businesses can deduct the full cost of qualifying assets in the year of purchase at both the federal and state level. That's a good thing. There is no state level estate tax and no state level inheritance tax. More good things. Property taxes are low relative to personal income, and the state's public pension system is well funded, in fact, overfunded at 104%. That is to say, Utah has more than $1 on hand for every dollar it owes in future public pension obligations. State and local debt per capita is $6,599, which is a hair on the high side. The Tax Foundation identifies Utah as a state that avoids the structural errors that drag other states down. No convenience rules that tax remote workers in other states. That's a good thing. There are no recapture provisions that eliminate the benefit of lower brackets. There is no state level alternative minimum tax and no split roll that taxes commercial properties at higher ratios than residential properties. There's no tangible personal property tax that traps with $0 de minimis exemptions. The tax code does what it says for the most part at the rate it says, without complicated additions, exceptions, and carve-outs that make other states' codes virtually unreadable. State and local tax collections per capita are $6,277, slightly above the national average, which is not a bad thing. That figure reflects the fact that Utah does impose all major taxes at moderate rates rather than relying on one or two taxes at higher rates. Revenue is therefore diversified across income, sales, and property taxes, which reduces volatility and makes the budget less sensitive to swings in any single economic indicator. But that 4.5% rate is a lot higher than zero. In fact, if you take out your calculator and divide 4.5 by zero, you get an error, because that number, if it were to produce a number, would be infinity. If you don't believe me, go ask your high school algebra teacher. To put all this in perspective and use some concrete numbers, and we'll use some round numbers to keep things simple. On $500,000 of annual pass-through income, 4.5% produces $22,500 in state income tax. In Florida, that figure is zero. In Texas, that figure would also be zero. Over 10 years, the difference is $225,000, and that's before we account for the time value of money. Now, Utah, as I said at the beginning, I did not bury the lead. Utah is not the worst place to be from a fiscal and tax policy standpoint. Utah's rate is lower than Georgia, Colorado, Montana, and most states that impose an income tax, but it is not lower than zero. Utah is a state that other states should study. The structural quality of their tax code is among the best of any state that imposes all major tax types. The pension system is well funded. Their debt burden is moderate. There are rate reductions. So if you're a state that's going to continue having income taxes, look at Utah. But if you're a state that wants to do better than that, like Florida and Texas, Utah would not be the example to follow. Now, keeping all of that in mind, let's talk about redomestication. Redomestication is the lesser known legal process of transferring a company's state of domicile to a new state without dissolving it, without creating a new entity, and without triggering federal income taxes, but only when performed within the requisite formalities required by the Federal Internal Revenue Code, applicable Treasury regulations, and the statutory frameworks of both the destination and departing states. When executed by a competent professional, the company retains its existing federal employer identification number, contracts, credit history, and bank accounts. Foreign entity registration is not the same thing as redomestication, because foreign entity registration, also referred to as foreign qualification amongst other sometimes misleading terminology, does not change the company's domicile. In fact, it keeps the entity in Utah indefinitely and merely adds a second state of compliance and tax burdens. A traditional merger is also not the same thing as redomestication, because it creates a new entity in the destination state, can result in the loss of the federal employer identification number, and can trigger serious tax consequences. Finally, dissolution terminates the company. Dissolution is not a relocation mechanism. It is a we are broke and we are going out of business mechanism. Therefore, if you have a so-called professional like an attorney or a CPA, or God forbid, AI, suggesting dissolution as a relocation mechanism, please, I implore you, get better advice. Redomestication, when paired with a change of personal residency and that's an important and, a reduction or outright cessation of business operations in Utah, can reduce or even eliminate state tax exposure for the entity and its owners. Utah is the best state in the country at imposing an income tax. Florida and Texas are the best states in the country at not imposing one. Now is the time to act before the Utah legislature changes the law to hinder or even eliminate the option of redomestication. If you have questions regarding potentially redomesticating your existing LLC or corporation out of Utah or out of another state, please use the link in the description for more information on this process and to schedule time for you and I to speak one-on-one about your specific situation. Again, my name is Chad Cummings, and I hope that you found this information helpful. As always, the information in this presentation, like all of my presentations, is necessarily general in nature and is not legal or tax advice, nor should it be construed as such, because that advice, by definition, must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my many earlier presentations on these topics, please visit my firm website at www.cummings.law, not .com, but .law, to schedule time for a consultation. I look forward to that opportunity to speak with and perhaps even work with you very soon.